Now, it took a while, but by April of last year, people were starting to believe in the story again. And that's when Boston Beer reported a huge earnings beat driven by the non-beer business category. That's Angry Orchard and Twisted Tea. And the new Truly, this is what's known as hard seltzer. I mean, how did they think of this? I don't even know. This is wild berry. It's got 5% alcohol. The key metric in the spirits industry is called depletions, shipments to retailers, and Boston Beer's depletions were up 8%, and that translated to almost 18% revenue growth. That's a fabulous number. The core Sam Adams brand remained weak, but it was more than offset by the strength of the rest of the company, particularly Truly. From there, the stock exploded higher, running straight from 200 to 300 by the end of last June. Of course, it hasn't all been smooth sailing. Boston Beer had some stumbles as they got their turnaround on track, and its stock really got nailed in the fourth quarter as the whole market melted down. But quarter after quarter, management told the same story. Twisted Tea was on fire, Angry Orchard red hot, and the hard seltzer is smoking. Last October, they said this category was set to triple. 3/4 of the market is controlled by two brands, Boston Beer's Truly and White Claw, from the company behind Mike's Hard Lemonade. Even after its fabulous run in 2018, there's still plenty of doubters. For example, UBS initiated coverage of Boston Beer last December with a sell rating and a $2.28 price target, arguing the stock was too expensive, and sooner or later, the growth was bound to slow. Given that the stock's up more than 60% for 2019, can I call that call premature? I don't want to give anyone a hard time, although, at this point, because I missed it too. But they keep proving the skeptics wrong. I knew not to sell it every step of the way. Now, in April, Goldman Sachs, good analyst, downgraded the stock to a sell. And then a couple of weeks later, Barron's ran a hitch up. A happy hour could be over for Boston Beer stock. Once again, when Boston Beer reported later that same month, they shut the lights out. In fact, the company literally doubled Wall Street's earnings estimates, making just over $2. Analysts figured for $1. Even though management left their full-year guidance unchanged, the results were phenomenal across just every line. Once again, the new products were the big drivers, although this time Dave Berwick really focused on Truly. He said, Truly continues to grow beyond our expectations, all right? We're expanding distribution across all channels and improving our position as a leader in hard seltzer as more competitors enter the category. It was a very bullish story, so bullish that when the other big innovator in the beer business, Constellation Brands, reported the other day, management was peppered over and over with questions about when they'll launch their own spiked seltzer. The analysts, they're jonesing for Truly. In response, the stock quickly spiked back to $320. Look at this. Remember, everybody a lot of guys calling the top right here and went to $320. And since then, it's just kept running, especially when the whole market it rolled over in May. Earlier this week, Boston Beer broke out above $400. Look at this, will you? This is an incredible move. All right, it's pulled back to 390 as of today, but that is one magnificent run. Now, Boston Beer reports this next quarter exactly 1 week from today. I think you got to be careful about trying to game a quarter because this stock's run so much. But last week, Guggenheim raised its price target of Boston Beer to $421. They argue we could be looking at years of successful growth here thanks to Truly and Trulyers. And there could be even more upside if the company can turn around Sam Adams' brand or get some of its newest brands to take off like Wild Leaf or Tura. I thought Tura was like a car system. Anyway, Guggenheim's also bullish about the company's recent acquisition of Dogfish Head, the rapidly growing craft brewery, for $300 million. Maybe you can turn around the beer business. It's very hard to do. The problem, at these levels, the stock's trading at 39 times next year's estimates, which is super expensive, particularly for a beer company. Seems way out of whack. I like Boston Beer. I don't want you to chase it. So what's the bottom line? Losing stocks can become winners again when bold management makes smart decisions and bites the bullet. At this point, Boston Beer's run so much that I think it could sell off hard next week. And obviously, if Constellation comes out with a hard seltzer, this thing's going to go down. If it reports a good quarter, though, we got to take a look. If that happens, use the weakness to do some buying. Otherwise, keep your bat on your shoulder and wait for another pitch. But you know what? I got to hand it to these guys. They've reinvented the company, and they've done it in spectacular style.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.